Right now, Beyond Meat, ticker BYND, is trading live at $1.30 per share. It is in an active intraday free fall, down 95 cents, which is a 6.83% collapse on this November 10, 2025. And that $1.30 price, that 6.83% drop, is not a dip. It is not a buying opportunity. It is a scream for help. The immediate, jarring reality is that this stock is plunging today not on bad news, but in fear of bad news. The company is set to report its third quarter earnings after the market closes today, and this 6.83% crash is the market voting with its feet, a stampede of investors who are terrified of what that report will contain and are willing to sell at any price to get out before it drops. This is the complete and utter collapse of one of the greatest market expectations of the last decade. The dream is dead, and the stock price is the eulogy. Let's be clear about the grand story, the expectation that was sold to millions. This wasn't just a food company. This was supposed to be the Tesla stock of protein. It was a cultural phenomenon. When you bought BYND, you weren't just doing self-investing. You were buying the future. The narrative was beautiful, a high-tech food company using plant-based science to create a product indistinguishable from real meat, one that would steal market share from the trillion-dollar global meat market industry, save the planet, and make early investors rich. It was the perfect story for the Robinhood app generation. It IPO'd at $25, rocketed to over $230 a share, and captured the world's imagination. That was the expectation. The reality is $1.30. The reality is a 6.83% intraday crash. The reality is a company that is not just failing to grow, it is in a state of catastrophic, accelerating decline. The story has unraveled. The sales are not just slowing, they are collapsing. Preliminary results and company guidance have already warned of a potential 14 to 15% decline in revenue year over year. Think about that. A company that was valued as a high-growth tech stock, like NVIDIA in the AI boom, is now a degrowth story. Its product, once the hottest thing in the grocery aisle, is now sitting on the shelf. The partnerships with fast food giants that were supposed to print cash have fizzled. Consumers, it turns out, have tried the product, and they are not coming back for more, not at a price premium to real meat in an inflationary environment. And today's drop is all about the fear of the numbers. The market is terrified of what is coming in a few hours. Investors are not asking, will they beat earnings? They are asking, are they going to be solvent? The company recently delayed its earnings filing to assess material impairment charges. Those are corporate speak for some of our assets, the things we thought were valuable, are not as valuable as we said they were. It's a massive red flag. The company is burning cash at an alarming rate, with a $64.5 million adjusted EBITDA loss in the first half of this year alone. They are not profitable. Their gross margins have been negative in the past. They were literally losing money on every single patty they sold. This is not the Apple stock business model of high margins and a walled garden. This is a brutal, low-margin, commodity food business, and they are losing the fight. But the most devastating part of this reality, the one that truly explains the $1.30 price, is the dilution. This is something that many doing online investing might miss, but it is the entire story. To survive, to keep the lights on while burning all that cash, Beyond Meat had to raise funds. But with the stock this low, they couldn't just get a simple loan. So in October, they did a debt-for-equity swap. This deal, a move of pure desperation, allowed for the creation of up to 326 million new shares of stock. To put that in perspective, this is a nearly five-fold increase in the total number of shares outstanding. Every single share that an investor held in their Fidelity brokerage account, every share they bought on SoFi Invest, was just diluted into oblivion. Their slice of the future of food pie was just cut into 5 smaller, almost worthless pieces. This is why the stock is at $1.30. It's not just the bad sales, it's that the company was forced to print an ocean of new shares to stay afloat, drowning every existing shareholder in the process. This is why the stock is now a meme stock. It has no institutional support. The smart money in Fidelity mutual funds or Schwab Intelligent Portfolios wants nothing to do with this. A look at the analyst ratings is a sea of red. Sell, strong sell, underperform. No one on Wall Street believes in this story anymore. The only people left are day traders on platforms like Interactive Brokers, trying to scalp a few pennies from the volatility, and long-term bag holders who bought the dream at $50, $100, or $200 and are just praying. The stock did have a bizarre 388% rally in October, a classic meme stock spasm, but it was completely disconnected from the financial reality and collapsed almost as fast as it rose. So, where does it go from here? The future outlook is a battle of two bleak realities. The bull case, if you can even call it that, is no longer about growth. The expectation of a $100 billion company is gone. The new pathetic bull case is just survival. It's that the cash burn stops, that the cost-cutting works, and that the company is bought out for parts by a larger food conglomerate for a few dollars a share. That's the best-case scenario, a merciful buyout. The bear case, the one the market is pricing in right now with this 6.83% drop, is far more direct. The bear case is $0. It's that the earnings report this afternoon confirms the revenue collapse, confirms the cash burn is out of control, and confirms that the material impairment is massive. It's that the company will be forced into even more dilution, a reverse stock split just to stay listed on the exchange, and will eventually slide into bankruptcy. This is not a stock for an individual brokerage account. It's a lottery ticket on a company that is clearly on the edge. This is why you will never see a stock like this in a responsible Fidelity Wealth Management portfolio. This is a fascinating and tragic story. This was a company that had it all: a powerful story, a hot product, and a market that wanted to believe. But the expectation, the dream, just smashed head first into the brutal reality of bad financials. I want to know what you think, and be honest. Comment below. Have you or anyone you know actually bought a Beyond Meat product in the last 6 months? I am genuinely curious if the real-world demand is as bad as these financial numbers suggest. In the end, this $1.30 price is the market's final cold verdict. The expectation was that Beyond Meat was a technology company, a Silicon Valley disruptor in a lab coat. The reality is that it's a food company, and a failing one at that. It's a company with a broken balance sheet, a product consumers are rejecting, and a stock that has been diluted into dust. Today's 6.83% drop is just the sound of the last few believers finally, painfully giving up. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.